You for joining us for our webinar today. My name is Brittany Webb. I am the Senior Research Director here at the National Housing Conference. Very excited for our conversation today. This webinar is titled Celebrating 250, Life, Liberty, and the Pursuit of Homeownership. We have a great set of panelists, and we will get into that in just a moment, but a few housekeeping notes. First off, we want to thank NeighborWorks America for their sponsorship and helping us put on these fantastic webinars. And for the remaining of the webinar, just a couple of reminders. Our panelists will be taking questions from the audience. For any questions, please submit those through the Q&A function, not the chat box. We love a discussion in the chat box, but the Q&A function is best for whatever questions you would like our panel to consider later. And we are recording this webinar, and we'll send out the recording and slides once it is complete. And with that, I will pass it over to David.
Okay, well, thank you all for being here, and I'm going to just jump right into this. This is an awfully big subject to cover in a few minutes or even a few hours, but we'll do our best. The United States has one of the highest homeownership rates in the world, and it did not happen by accident. Let's go to the first slide. There is no better place to start than the beginning. It's safe to say that all the founders understood that ownership of land was a foundational aspect of their revolution. Kings could bestow and take lands at will, and those fortunate enough to own land knew that better than anyone. Next slide. Of course, looking back, the contradictions in the Declaration of Independence and the Bill of Rights that expressed a broad vision of personal rights and freedoms excluded the lives and property of millions through enslavement and discrimination. We are truly a work in progress, striving, as President Obama liked to quote President Lincoln saying, towards a more perfect union. The first major federal policy to make land and homesteads widely available came with the Homestead Act of 1962. You can go to the next one. Homeownership, however, remained in the mid to high 40s through most of our first century of history. Though almost two, though given the rapid expansion of the population through successive waves of immigration, maintaining that level is impressive in itself. The turning point for our modern reality began, we can go to the next slide, when the nation was rocked by the Great Depression. A massive systemic failure in banking and homeownership, and among other things, as this scene from It's a Wonderful Life illustrates.
Just remember that this thing isn't as black as it appears. I have some news for you, folks. I was just talking to old man Potter, and he's guaranteed cash payments to the bank. The bank's going to reopen next week.
But, George, I got my money here. Did he guarantee this place?
Well, no, Charlie, I didn't even ask him. We don't need Potter over here.
And I'll take mine now.
No, but you're thinking of this place all wrong, as if I had the money back in a safe. The money's not here. Well, your money's in Joe's house. That's right next to yours. And in the Kennedy house, and Mrs. Maitland's house, and 100 others. You're lending them the money to build, and then they're going to pay it back to you as best they can. Now, what are you going to do, foreclose on them?
I got $242 in here, and $242 isn't going to break anybody.
There you are.
That'll close my account.
Your account's still here. That's a loan. Okay. All right, Ed.
Well, I got $300 here, George.
All right, now, Ed, what'll it take until the bank opens? What do you need?
Well, I suppose $20?
$20. Now you're talking.
All right.
Thanks, Ed. That's fine. All right, now, Miss Thompson, how much do you want?
But it's your own money,
Now,
George.
never mind about that. How much do you want now?
I can get along with 20, all right.
$20, fine.
And I'll sign
There
the
you are.
paper.
You don't have to sign anything. I know you. You pay when you can. That's okay. All right, Miss Davis.
Could I have $17.50?
Bless your heart. Of course you can have it. You got 50 cents. There we go. 7.
We're gonna make it, George.
6.
They'll never close us up today.
5, 4, 3, 2, 1. Bingo!
As banks continued to fail and employment collapsed, millions lost their homes. Next slide. This is because mortgages were limited to loans that had to be refinanced every 5 years. Even if you paid your mortgage on time, if the local lender had no funds to refinance you, you lost your home if you couldn't pay off the loan. And loans were non-amortizing, meaning you were paying interest only. Next one. The solution devised by the Roosevelt administration was both brilliant and revolutionary. It put the government in the mortgage lending business for the first time in history and made available an entirely new loan product, a fully amortizing 15-year mortgage loan with a fixed interest rate. More than 1 million loans were made in the program's first 2 years, and 4 out of 5 homeowners who participated were saved from foreclosure. Next one. Ultimately, the HOLC program was replaced by FHA. And next one. But banks were reluctant to trust this new concept of federal insurance, or simply didn't have the capital to lend. So Congress created the Federal National Mortgage Association to buy FHA-insured loans, adding liquidity to the market. Next one. By the end of World War II, all of the components of a dynamic, responsive, and scalable mortgage finance system were in place. Next. Not everyone benefited. Redlining and direct racial discrimination kept the dream of homeownership out of reach for many, though not all, non-white Americans. And it wasn't until more than 30 years later that mortgage discrimination became illegal. Progress since then has been fraught with challenges. The legacy of redlining has created lasting scars on neighborhoods throughout the country. As you can see all too clearly in this satellite photo of Detroit, the neighborhood on the left once looked like the one on the right. Next one. Gains in homeownership were devastated during the Great Recession, when the mortgage finance system grew at a breakneck speed and then collapsed with the help of toxic mortgages and synthetic financial products that leveraged systemic failures, as was brilliantly demonstrated in The Big Short.
Chris? Damn it. Sorry. This is your basic mortgage bond. All right? The originals were simple. They were just thousands of AAA mortgages bundled together, guaranteed by the U.S. government. The modern ones are different. They're private, and they're made up of layers of tranches. The highest level AAAs getting paid first, the lowest rated Bs getting paid last, taking on defaults first. Now, obviously, if you're buying Bs, you can make more money, but they're a little risky. Sometimes they fail. Chris? Somewhere along the line, these Bs and double Bs went from a little risky to dog shit. Where's the trash?
Right behind you.
I'm talking rock bottom FICO scores. No income verification. Adjustable rates, dog shit. The default rates are already up from 1% to 4%, fellas. And if they rise to 8%, and they will, a lot of these triple Bs are going to 0 too. And that, you're too close, is an opportunity.
Okay, you're saying that at 8% the bonds fail and we are already at 4%?
That's right.
If they go to 8, it's Armageddon.
Yeah, that's right. Let me put it this way. I'm standing in front of a burning house, and I'm offering you fire insurance on it. A's, 0. B's, 0. Double B's, 0. Triple B's, 0. And then that happens.
What is that?
That's America's housing market.
So today, we can go to the next slide. Today we face a new crisis. Ultimately, the system was stabilized and strengthened through the Dodd-Frank Act, which eliminated most of the toxic mortgage products and rationalized mortgage risk. Next one. So today we face a new crisis, a direct result of the devastation of the home building industry in the wake of the Great Recession. As I often say, the law of supply and demand is never repealed. NHC's Paycheck to Paycheck database illustrates the impact of the supply and affordability crisis in nearly every occupation and community in the country. Registered nurses who could afford to buy a home in 290 metro areas in 2019 can only afford to buy in 147 metro areas today. And that leads us to the 21st Century Road to Housing Act. The bill seeks to make long-needed reforms in federal housing programs. Implementation of the bill is NHC's highest priority, and we look forward to working together to make its promise a reality. So thank you.
All right. Well, I'll take it over from here. Thanks so much, David. And thank you to the National Housing Conference and NeighborWorks America for bringing us all together today. Well, good afternoon, everyone. I'm Mackenzie Hoover, Senior Director of Housing Policy at the U.S. Chamber. And I've loved getting to see in the chat where everyone is from. I see folks from Texas, Wisconsin, and it's clear that this issue is, as David pointed out, a national issue. We feel it uniquely in certain areas, but it's clear that we are facing a crisis of home affordability right now. And as our nation marks our 250th anniversary, we're reflecting on the ideas that have defined the American experience: opportunity, economic freedom, and the ability to build a better future. And for generations, home ownership has been the clearest expression of that promise. Despite today's affordability challenge, this aspiration still remains fairly strong. People continue to view home ownership as a pathway to stability, to wealth building, and stronger communities. And at the U.S. Chamber of Commerce, we also see another side of this conversation as well. Housing is an economic competitiveness issue. So across the country, we continue to hear from employers and from state and local chambers that housing challenges are continuing to affect their ability to recruit workers, to retain talent, and to support business growth. And when workers can't find housing near jobs or opportunity, communities really feel the consequences in labor shortages, longer commutes, slower economic growth, and reduced mobility. And that's one of the reasons that housing has become such a significant priority for the business community. Employers understand that supporting strong housing markets supports strong economies. So today's discussion will focus on a critical piece of that equation, helping families successfully navigate the path to home ownership. Expanding housing supply is essential, but so is ensuring that prospective homebuyers have access to trusted information, financial preparation, counseling, and ongoing support that can help them achieve sustainable home ownership. So we're fortunate today to have an outstanding panel of experts who work at different points along that home ownership and home buying journey. We have Cherise Calendar-Scott, who's a real estate broker, developer, and certified international property specialist and realtist. Carol Clark serves as the Chief Executive Officer of Neighborhood Housing Services, Birmingham. We have Katie Nasker, Senior Vice President and Community Investment Officer at FHL Bank, Chicago, and Marshall Brooks, the Director of Rental Assistance at Michigan State Housing Development Authority. So we'll each give you a preview before we jump over into Q&A. So with that, I would love to turn it over to you, Cherise.
Thank you, Mackenzie, and thank you, David, for sharing that history. Good afternoon, everyone. It's a pleasure to be here with you today. My name is Cherise Calendar-Scott, and I am a broker along with Desiree Calendar, who is my mother, with Desiree Calendar and Associates Realtors based in Bowie, Maryland, which is where I am a native to, Maryland, in the Washington, D.C. area. There's a slide up that I'm really just going to reference as a tool. It's what we share with our home buyers, and I think it is a reflection of sort of what housing counselors may also share. So we can kind of just skip through it, and I will talk through it just to kind of share a little bit about myself as we contribute to the conversation here this afternoon. So as a real estate professional, I often meet consumers at any given point of their journey toward home ownership. I have been a professional for 13 years in this industry now. My mother, Desiree Calendar, has 40 years of experience in this industry. That's 2 generations. And you can flip through to the next slide. We worked together, and she opened her own brokerage in 2007. Just like you hear, Keller Williams, Long and Foster, Desiree Callender and Associates is a broker at that level, and decided to go independent at that time. You can skip to the next slide and then the next slide. As a small family brokerage, I had 20 years of media experience prior to coming to real estate. And my whole purpose for getting into the industry was to support my mom as an independent, female-owned broker. David shared a lot of history there, and you can skip to the next slide. And I think it's important to note that, prior to 1947, that Black real estate professionals could not operate in this industry as a part of the Realtor Association. And so when you hear the term realtist that Mackenzie introduced me as, that is what the National Association of Realtor Brokers calls themselves, realtists, in addition to being a realtor affiliation with the National Association of Realtors. These associations were developed to ensure that code of ethics and accessibility to housing was granted and that the rules that were set were being followed. And so when you talk about the access and the need to have professionals in the space, that's where your real estate professionals come in. They're supposed to lead, guide, and direct you. You can switch to the next slide. We have 4 stages essentially to the home ownership journey, we call it. And, this is what we have our preparing to buy checklist. I can give this to any number of consumer, and a lot of times some people may come to you ready. Some people may be a year or 2 out. I think one of the questions we'll answer later on is, when should people seek counseling? I'm really excited to talk more about that because it really does stem from education, and education doesn't have a time on it. We start learning from the time that we go to kindergarten. Some of the legislation, which is one of the committees that I've sat on since I've been a realtor in real estate, is the legislative committee. Learning that policies and legislation are what help drive the industry and what help drive our economic development, our workforce development, our community development. It's all tied together. And so I'm very excited to be here with our other panelists today to share more about what the history has been, where we are presently, and what we can do collectively to come up with solutions for the future. If you scroll to the next slide, it just, will continue to show you writing your offer, checklist. You can skip to the next one. Under contract checklist for my folks that like to, see how they're progressing through things. And then the last slide. So, welcome home. So I believe all the slides from the presentations will be shared today. I'm not going to talk through the whole presentation, but it will be shared and we'll reference it later on in the conversation. So with that, I will kick it over to my fellow panelist, Carol Clark.
Thank you, Sharice. And I don't have slides. So I'm Carol Clark. I'm CEO of Neighborhood Housing Services of Birmingham. And as we celebrate the 250th anniversary of our country and reflect on those ideals of life, liberty, and the pursuit of homeownership, I think it's easier to understand what we do here at Neighborhood Housing with a little context on Birmingham. Birmingham is one of America's youngest major cities, founded in 1871 at the intersection of rich deposits of naturally occurring iron ore, coal, and limestone, which were the 3 ingredients needed to make steel. Birmingham became known as the Magic City because it sort of poofed into existence seemingly overnight. So steel, railroads, and heavy metals manufacturing built Birmingham. Unlike many other older Southern cities, Birmingham was born during the brief period after emancipation called the Reconstruction period. So people flocked here from across the country and around the world seeking new opportunity, including European immigrants, rural white families, and African Americans. Not just from farms, but also elite Blacks looking to participate fully in the economy and the building of the Black community here. So historians have observed that many of Birmingham's earliest Black residents were able to purchase homes and land. And by the turn of the 20th century, Black homeownership rates here stood out significantly compared with many other American cities.
Birmingham was also home to one of the South's most influential Black business communities. But those early economic gains, I think I'm getting into the history that we're a little more known for. Black residents became increasingly constrained by segregation, redlining, exclusionary zoning, and racial violence. Birmingham eventually became one of America's most segregated cities, and ultimately one of the defining battlegrounds for the civil rights movement. And many, even if you weren't alive during this time, many people are familiar with the images of police, children facing police dogs and fire hoses, images that really shocked and changed America. The 16th Street bombing of where 4 little girls perished and one was significantly injured, and 2 little Black boys were killed the same day. And that's a lesser known part of that history. But this history led directly to the passage of the Civil Rights Act and helped to build momentum for the Fair Housing Act of 1968 that is so central to our work today. So our city is famous and infamous for that history. But today our skies are a lot cleaner, and we have a diverse regional economy that is the largest in the state, and it's anchored by healthcare, finance, higher education, engineering, and professional services. And Birmingham is the core city, the inner city core of a 7-county metro area, and it is a majority African American city with Black residents making up about 2/3 of the population. Yet Black and white middle class shifts to suburban communities and the legacy of those discriminatory policies continue to shape who owns property, who builds wealth, and who has access to opportunity. Our homeownership rates illustrate that story. They are similar disparities to, the national rates, even though we once had one of the South's largest Black middle class here in Birmingham. Another disturbing trend that sort of keeps me awake at night is that, an alarmingly large share of Birmingham's single-family residences are no longer owner-occupied. So many neighborhoods that were stable and overwhelmingly homeowner neighborhoods now contain, pretty significant numbers of investor-owned rental properties. Every time a homeowner dies without a clear estate plan, every time the taxes become delinquent, and people can't catch up, or when an inherited home without clear title falls into disrepair, it's just another opportunity for generational wealth to just quietly disappear. And this has happened here since the 60s. We were built for segregation. So first white flight, then Black middle class flight, then all those discriminatory practices that David introduced as a national phenomenon. So, when we lose property, when we lose homes, when families lose homes, it's not just losing housing. It's lost wealth. It's lost value for the neighborhoods, and usually it's generating blight or an increase in blight. It's lost family history. And so that's the basic context for our work in Birmingham, both with the city government and the housing authority, even though our counseling services tend to cast a broader net, really all across North Central Alabama. So as Neighborhood Housing Services of Birmingham, we were founded in 1970 as one of the early network organizations in what we now know as NeighborWorks America. Our roots are really important to us because we weren't created as a government program. We were created as a resident-led community development organization. The original Neighborhood Housing Services model brought together three groups that rarely hung out together: residents, lenders, and local government. And it was a simple but powerful idea that neighborhoods improve when residents are not passive recipients of services, but active leaders in building their own communities. And that philosophy still defines us today. Our governing board is made up, 1/3 of our governing board is residents of the communities that we were created to serve. And as a charter member of NeighborWorks America, we're part of a national system committed to strengthening communities through homeownership, housing stability, neighborhood revitalization, and resident leadership. Today, our work centers around three broad areas. First is our NeighborWorks Homeownership Center, wherein we provide HUD-certified home buyer education, one-on-one financial counseling, foreclosure prevention services, and post-purchase support. Second, we really focus on preserving existing homeowners through our Healthy Housing Initiative, which provides homeowner education and grants critical repairs to homeowners. And a third area is preserving neighborhoods themselves through community building and engagement, affordable housing development, and increasingly incorporating services to help families resolve heirs' property issues before more generational wealth is lost. So, in my mind, we're ultimately in the wealth building business. Housing just happens to be the tool we use. And while Birmingham's history explains why our work is so necessary here, it doesn't really define our future. Every week, we see families become first-generation homeowners. We see renters become investors and take control of their futures. We see people who never thought they could own a home come to the closing table with, tears of joy in their eyes. And that reminds us, our work reminds us all the time that the American dream is very much alive in spite of these, economic conditions that we find ourselves in. And sometimes people just need help identifying the path and a little support staying the course. And, that's what we do. So thank you. So now I'm going to ask Katie to take over.
Thank you, Carol. Good afternoon, everyone. My name is Katie Napsker. I serve as Senior Vice President and Community Investment Officer at the Federal Home Loan Bank of Chicago, where I lead our community investment strategy in Illinois and Wisconsin. We work with member financial institutions, housing finance agencies, nonprofit partners, developers, housing counselors, and a host of other partners to expand access to affordable housing and strengthen communities across both states. I'm especially glad to be part of this session because the topic homeownership is really central to our mission, and it's central to the program that I'm going to be sharing with you today, which builds on what Carol was talking about regarding the importance of housing counseling. So excited to be here. Next slide, please. Before I delve into the program, I want to share a bit about who we are for those who may not be familiar. In David's opening remarks, he shared the scene from It's a Wonderful Life. The Federal Home Loan Bank system was created by Congress in 1932 to support housing finance and community investment during that precise time period, and for some of the reasons that movie hints at. Today, 11 regional federal home loan banks serve districts across the country. So our district is fairly small, 2 states. Some of the districts are larger, but we're member-owned cooperatives. And our members include banks, credit unions, insurance companies, savings institutions, and CDFIs. To give you a sense of scale, the Federal Home Loan Bank of Chicago has more than 600 member financial institutions that are chartered in Illinois and Wisconsin. We, like the other home loan banks, provide liquidity, funding, and community investment resources to our members. By federal statute, every federal home loan bank contributes at least 10% of earnings to its affordable housing program, or you may know that as AHP if you're in the housing development space. That program supports affordable housing development. It also supports home buyer assistance, down payment assistance, home rehab, and that program is really foundational to the community investment strategy of every federal home loan bank, all 11 of us. At Federal Home Loan Bank of Chicago, we also stand up voluntary programs to respond to specific, unique district needs. We fund these above and beyond that statutory contribution, and they allow us to address gaps that the AHP does not serve or perhaps doesn't serve sufficiently. To give a sense of scale, in 2025, the Federal Home Loan Bank of Chicago provided $106 million in grant funding for housing and economic development purposes, including $43 million in down payment assistance to our members who are making mortgages to income eligible customers. We also support community lending that our members do. So we supported about $3.3 billion in community lending of our members last year as well. And we are just one of the banks. So collectively, the 11 of us are bringing significant resources to the table to support this work. But the voluntary programs, which is what I'm going to talk about today, one of ours, those are unique to each federal home loan bank. Our housing counseling resource program, again, a voluntary offering in the Chicago district, is unlike most of our homeownership tools in that it does not begin with a mortgage transaction. It really starts upstream, helping households become mortgage ready and creating future opportunities for homeownership and future opportunities for mortgage lending for our members. Next slide, please. So most of our affordable housing tools flow directly to or through our member institutions to support specific transactions. So for example, as I said, our down payment grants, those we provide them to our members who pass them through to eligible borrowers at the time of closing. That transaction-based model is a critical part of our strategy and the strategy of all the federal home loan banks. But several years ago in Chicago, we looked at homeownership trends across the 2 states we serve, and we realized that affordability at closing was really only part of the challenge, right? Many households aspired to homeownership, but were not prepared for that lender stage yet. They often needed help building credit, increasing savings, understanding mortgage options, sort of piecing together the down payment assistance that might be needed, and also just determining whether homeownership was the right solution for them at that point in time. Here's where housing counseling agencies come in, right? Housing counseling organizations help consumers take those steps, but they were being asked to do more with increasingly scarce resources. The need was increasing, the resources were scaling back. They're doing critical work, but the need outpaced their capacity. So we, at the Federal Home Loan Bank, with the range of partners that we work with, saw an opportunity to strengthen and expand that existing infrastructure in that housing counseling ecosystem so more households could be reached. So we decided to invest in that pathway counseling that ultimately leads to the transactions that later will involve members who may be our lenders, who may be our members. And so that's where our program was born, the Housing Counseling Resource Program. Next slide, please. So in a nutshell, the program provides grant funding to HUD-certified housing counseling agencies that are in Illinois and Wisconsin to expand their services for low and moderate income and underrepresented homebuyers and existing homeowners. This program, which we call HCRP as our acronym because it's a mouthful, is really an investment in homeownership infrastructure in our view. And the goals are really straightforward: expand the pipeline of mortgage-ready homebuyers, strengthen the capacity of the counseling agencies we are supporting, and then build a stronger statewide counseling network because we see real value in that coordinated ecosystem in each state, bringing full sort of statewide coverage of counseling services to each of the states we serve. From a structure standpoint, we fund the program. The Federal Home Loan Bank funds the program, but we don't administer it directly. Instead, we partner with the 2 HFAs in our district, IDA, the Illinois Housing Finance Authority, and WHEDA, the Wisconsin Housing and Economic Development Authority. These 2 entities administer the program on our behalf, and they They have statewide reach, they have infrastructure in place, relationships already intact when we started it with some of the counseling agencies. So rather than build a parallel kind of structure to support counseling, we decided to leverage the statewide partners we already had, which made a lot of sense. They then deploy the funds to the HUD certified housing counseling agencies through an RFP process. And those entities then use the funds to expand their services, reach more customers, and support counseling activities across the entire homeownership spectrum. Next slide, please. So what have we done through this program? Since launch, which was in 2022, we have awarded more than $13 million to housing counseling agencies across the 2 states. The funds have touched tens of thousands of home buyers or potential home buyers, I'll say. In Illinois alone, the funded agencies supported 49,000 plus households. So significant reach. Across the 2 states, nearly 9,000 of the households served successfully purchased a home in sort of close succession to their in timing, sort of close to the time they received the counseling. The longer term tracking of some of those outcomes for folks who may not be ready right now, that's harder to gauge, but we know that at least 9,000 households have purchased a home in short succession from having received the counseling. We awarded in 2025 multi-year support to 44 counseling organizations, and collectively we achieved statewide coverage in both states. So the footprints of those agencies, we achieved geographic coverage of all parts of both states, which was really exciting. The impact of the program for households, I think it's pretty clear. It expands access to homeownership. For counseling agencies, it expands capacity and allows them to do more. For the HFAs, it's been the 2, IDA and WIDA, it's been a leadership platform for them to really support a more coordinated approach to homeownership. For our members, it builds a strong future pipeline. And for us, I think it's helped us think differently about our role, not only supporting transactions with down payment and such, but helping strengthen the conditions that then make those transactions possible later. So from a national audience, I think the program offers a couple broader lessons. Number one, homeownership pathways matter. They matter as much as homeownership transactions, right? Those pathways are critical. Housing counseling is essential infrastructure for homeownership. It's not an ancillary service. That's key. And then strong statewide partnerships can scale impact far beyond what a single organization can do on their own. And we have found that tremendously valuable as well. With that, I will stop. I want to keep this conversation moving and pass it off to Marshall Brooks, but I thank you for the opportunity to share this with you, and I look forward to the Q&A shortly. Thank you.
Thank you, Katie, and good afternoon, everybody. My name is Marshall Brooks. I am the Director of Rental Assistance with the Michigan State Housing Development Authority, or MSHDA. I'm here representing one of my favorite programs, but certainly MSHDA administers a plethora of programs aimed at increasing the housing supply, affordability, and homeownership rates across the state of Michigan. But I'm here today to talk about our Key to Own homeownership program within our Housing Choice Voucher program. And really, as we hear from the other panelists, I like to think that this presentation, or my presentation, kind of culminizes all the efforts, all the programs, all the partnerships in a way where we can look right down at the individual level and see the individual impact all the work of everybody is having. So with that, next slide, please. So the Key to Own program allows Housing Choice Voucher holders to use their voucher to purchase a home rather than renting. So in the state of Michigan, MSHDA represents about 29,000 households with voucher rental assistance. Nationwide, there's a little more, I think, than a little closer to 2.3 million households. And some public housing authorities like MSHDA administer a home ownership option. We brand that our Key to Own program. So rather than renting and paying for rental, it helps provide financial readiness, home buyer education, and counseling throughout the process, prepares families for home ownership, which allows MSHDA through the HUD program to pay that mortgage on behalf of the family. Instead of paying rent, we take their housing assistance payment, pay it directly towards their mortgage for up to 15 years, with certainly some expanded timelines for those that are elderly or disabled households. So in summary, back real quick. So in summary, again, we're using that HCV subsidy support the monthly housing costs. We're increasing that buying power because the value of their voucher is treated as income, helps support some of the low income families obtain homeownership that may otherwise not be able to. And then we do, in some cases, partner or pair that with some down payment assistance. So we run a down payment assistance program of up to $20,000 for a family, and it is a 5-year forgivable loan. Next slide, please. So the first story I'm going to tell you is Brenda. And like I said, really want to get down to the individual and the impact that these programs, counseling networks, real estate agents, lenders are all having on individual people. So Brenda came to MISHTA experiencing homelessness and navigating the lasting effects of trauma and mental health challenges. But despite these barriers, she took early steps towards that stability. Many years ago, or a few years ago, she applied for rental assistance. She was selected from our waiting list, and she was able to successfully lease a safe and stable home. She gained housing stability that supported her healing and independence and really created that secure environment to care for herself and for her family. Next slide. So a few years later, after Brenda was stabilized in her rental unit, she did join our sister program, which is the Family Self-Sufficiency Program. She joined earning low wages at the time and continuing her recovery journey. The MISHTA FSS program helped her build financial independence. So the way the FSS program works is we partner an individual with a LHCA or local housing counseling agency to work one-on-one with that participant, set those goals, provide support, and in return or reward for doing and achieving those goals, any increase in earned income, which would normally offset their housing assistance payment, gets placed in a savings account for that to grow, so that family could then use those dollars for further debt reduction, education, oftentimes down payment on a house, or a vehicle or retirement. Next slide, please. So through the FSS program, Brenda was paired, like I said, with the LHCA. With the guidance of the Housing Counseling Network, she received targeted financial education, homeownership counseling, and connections to help her local resources. All of this took place over a series of a couple of years. The support played a key role in strengthening her financial foundation, gave her confidence and education in the home buying process, and also helped her make well-informed decisions on her path to homeownership. Through that FSS, she developed an action plan. She reached her goals and then some, was able to create a plan to pay down her debt. One of our requirements in the Key to Own program is to be debt-free, with the exception of a few debt types. She did establish a good savings account and was even able to advocate and receive higher wages during this time. Next slide. So as Brenda became financially ready, she pursued homeownership through MISHTA's Key to Own program. Her income at the time was limited to Social Security and part-time work, so affordability really was a challenge. Like I mentioned earlier, to make this homeownership possible, the Key to Own connected Brenda with additional support. So we did support her with $20,000 in down payment assistance. She received several lender credits from our lending partners, and she was actually awarded additional grants through a partner organization. In this case, in particular, was Habitat for Humanity. So I'm happy to share that recently Brenda did reach her milestone and close on her new townhouse. Her escrow savings from that FSS program was used to furnish her home. She transitioned into stable long-term ownership. So Brenda's story, really, to summarize it, she successfully transitioned from homelessness to becoming a successful, empowered homeowner. She secured an affordable, stable environment that supports her long-term well-being. And today she continues to build financial independence through program supports. So Brenda's story is a powerful one. It is one of many, but it is really also a story of partnership. Brenda's story demonstrates how stable housing, the counseling support, and financial empowerment and partnerships can lead to long-term successes for individuals. It illustrated a full transition from homelessness to sustainable homeownership, really shows the impact of all of our partners, including those that are on the call today, the Housing Choice Voucher, our FSS, those housing counseling network, our lender partners, Keto, and other community partners all came together to support Brenda in achieving her dream of homeownership. Really highlights the effective use of our down payment assistance, grants, and mortgage supports to overcome the affordability barriers that some face, and reinforces how comprehensive support systems can strengthen financial independence and overall well-being. I do have another success story. We have a video that Mishta put together just a little bit ago. It is a little dated. We have some changes in staffing since then, but it's very applicable and very rewarding to hear directly from a participant who has been successful in the program. So with that, can we play the video?
When I found it, it was in pretty rough shape, but it had good bones, and it was in an area I wanted to be. It was handicap accessible, which I have a few issues that I needed that.
We were asked to come down and write a brand new program for Mishta, and it didn't have a name, but we knew that it was with the Housing Choice Voucher, which a lot of people will know as Section 8. And it allows the participant to go from a rental unit to purchasing a home, and instead of Mishta paying for the rent, we pay a portion of their mortgage, if not all of their mortgage.
I had been homeless in the street, had been to the shelter, but I made it here.
You're renting, you want to go to homeownership, step one is to call Mishta. Get a hold of us, we get you out an application, we get you enrolled in the program. You have to go to home buyer ed counseling, and you have to go to financial management counseling, so we can get all of that in order and educate you on the process of just being a good homeowner and what it takes to buy a house.
Somebody during them classes, somebody that worked for Mishta told me about the Keto Home.
But coming up with a name was probably the hardest thing. Toying around with the idea of keys, and we didn't know what to do with that, but we envisioned us handing the key to somebody and telling them that they owned their house. And in most cases, they're the first ones in their entire family to own a house. We preach three big things: all 3 credit scores over 640, at least $1,300 saved in the bank, and all credit cards, old bills paid off, and all bills paid on time for 1 year. But we get them to the lender. They get qualified just like anybody would. We want to give them everything we can before they move in, because shifting from rental to home ownership is life-changing, but it's also one of the most stressful things that they'll probably do in their life. And Mishta has programs that we are able to marry with this, so we bring in some of the other programs, and it makes sense. If Mishta's using the federal HUD dollars to pay for their mortgage, then we can come in and rehab the house. It's in everybody's best interest to keep that house up.
Mishta was a very big part of that. They've been wonderful to me. If I didn't understand something, I called them, and they were always answered.
We foresee going in this program are going to have to work really hard to get there, that we have built in every bell and whistle that we could think of to make them not only successful, but also to reward them for their hard work.
You never give up. You feel like it, you feel beaten some days, but you don't give up.
All right. Just want to thank you, everybody, for letting me have a few minutes. Look forward to the discussion. If any of our partners are on this call, we just want to share that we certainly appreciate your partnership. And for those of you we have yet to partner with, we look forward to that. And I'll hand it over to Mackenzie. Thank you.
Thanks so much, Marshall, and everyone, and for these incredible and insightful presentations. And I'd like to spend the rest of our time exploring these themes through Q&A. So our panelists are all coming back on the screen. And so I'll have some questions keyed up for them. In the meantime, feel free to submit questions through the Q&A feature in the chat. And so the first question is, why do we consider home ownership as a part of the American dream. And I'll jump in first for this one. Because at the Chamber, we often talk about our growth and opportunity imperative, which calls for policies that help our economy grow at 3% growth annually. And the reason is straightforward and very much tied to housing and economic growth. It's not just a statistic, but growing at 3% annually means more opportunity and an opportunity to create wealth for your families and for your kids to have it better than you had. And one of those key ways is through home ownership. So it's been one of the most tangible ways that families can participate in the American dream. For generations, it's represented stability, independence, upward mobility, and the chance to build something that lasts. And it creates stability and growth for the business community. Where there's that opportunity, it creates a thriving environment all around. So that's why the U.S. Chamber is even engaged in this work here today. Housing is not just a housing issue, as you all know, but it is a workforce issue, it is an economic growth, and it is what leads to thriving communities in the American dream. And so, Charisse, I'd love to turn it over to you to answer this one first before we hit everyone, for this question: why do we consider home ownership the American dream?
I think you hit on a lot of points. And, generational wealth building is one of those key elements that I think exist and it's underlying. I think depending on who you ask at what age they are and how much they know about home ownership, you might get a different answer, right? About what the American dream is as it pertains to housing, but definitely offers security. There's a sense of ownership, even though you're paying a mortgage on it. But if you're not born into wealth, it does set you up for the best opportunity to build generational wealth for your family. And again, we haven't been 250 years. Some of us have not been able to buy homes all of those 250 years, right? And so I think, again, depending on who you ask, you may get a different answer. But what I think people should walk away with is understanding that why it's the American dream is because it is a tool to build generational wealth, to set not only you where you are right now up for success, but also your family. So understanding the tools, how to sustain the home ownership and how to transfer the wealth of that home ownership is why it can be an American dream if you use it and know how to use it the right way.
Great. We'll go Carol, Katie, and Marshall to close it out for our round robin on this question. Looks like you're on mute there, Carol.
Okay, I did look up how that phrase came about and found it interesting. But, from my perspective, it's everything you guys have already said, of course. And it's also just kind of a marker, a success marker of, personal and financial maturity. And it can give a family a sense of permanence and belonging in a community. And as a former city official, I just think, it's better for the built environment because homeowners, tend to, I heard someone say, that rented house never gets painted, So even for the area around the home that's owned, I do believe that, and I don't want renters to feel like they don't have a place in our neighborhoods because they do. And we want everyone to have a home that works for them. But I do think that, home ownership is incredibly empower. Just ownership is so empowering for families and stabilizing for school-age children and so forth. So it's a big deal.
Katie?
Yeah, so the American dream of homeownership is really, that's sort of the origin story for the Federal Home Loan Bank system, right? We were created to support mortgage lending and make homeownership more accessible for American families. And so I think about this sometimes. And homeownership is one of the most widely shared aspirations, even when you control for different geographies, income strata, generations. It is sort of that standard that kind of transcends all those differences. It's that shared goal. It provides more than shelter. So it creates, and you talked about this a little bit, it creates stability for families. It also creates stability for communities. So many positive community outcomes when you look at those metrics, there's in many places they're very highly correlated with homeownership rates, and that's not by accident. It stabilizes communities. I think also for homeowners, it brings residents further into the fold of civic life, right? They're part of communities, they're invested in communities in a way that is different when you may be more temporary resident renting. So, it's not simply about purchasing a home. It's about creating long-term stability and opportunity for generations to come. And I think that's really a powerful driver.
That's great. Marshall, you want to close out this question before we move on?
Yeah, certainly. I can certainly echo everything that's been already shared, but I will add that, achieving the American dream in part is about stability and financial stability. And what we see with those exiting a rental situation into homeownership is the mortgage is not subject to the same inflationary factors as rents are. So rents go up every year. Your mortgage will not. It really creates that financial stability, certainly as a foundation to generational wealth and building equity in the home, but it also just insulates you from the market pressures of rising rental rates. And over the last 5 or 6 years, we can all attest that has been a lot. So,
yeah, I love all those various and perspectives that all combine to part of the reason it's the American dream. Well, I'm going to ask a few more specific questions, and we're continuing to get some questions in the chat. So feel free to submit any questions that the broader group that you have for the broader group in the chat. So Sharice, I want to start with you. What does your consumer pipeline look like? And at what point are potential buyers seeking services?
Thanks, Mackenzie. Our consumer pipeline is extremely diverse. As we stated, we're based in Maryland in the Washington, D.C. area. So that's a source of education, it's a source of government, it's a source of work source. It's also a very transient community, right, where we have people that are coming from different countries, different states. So at our brokerage, we've been able to expand our network in that way, not only just serving locally and nationally through our referral network, but also now globally. And so, what that looks like is sometimes students who have no credit and no rental history, or families that are on housing vouchers who are looking for rental opportunities, all the way to seniors who've been in their houses for 30 to 40 years, and now they're looking to transition. So not only are they selling for the first time, but they're also buying for the first time in an era that they haven't experienced yet, right, with a lot of technology. And then everyone in between, you have your singles, your couples, people with children who are seeking to settle down in an area where education is important to them. Where am I going to raise my kids where they can be a part of this community and not have to move again? And also my millennials, right? They're like, I might not be here that long, but I understand that if I can purchase a home right now, there's a leverage of investment that I might be able to utilize to move to the next place in my life, or they're following their career path. So we have a pretty broad scope in terms of what our consumer pipeline looks like, and we have to be able to meet people where they are. In terms of the question you asked is when they should, be tapping in, or when do we see them? I would say sometimes not soon enough. And I think we'll probably hear that in the conversation. Most people, the narrative of the American dream, they still have a thought that I have to have this 20% down payment before I can even think about buying a home. And I think that's a misnomer that we can squash today. Anyone on this call, tell all your friends, if they don't know already, that you don't need 20% down before you start looking into home ownership. Quite frankly, in our community, we've been going to the youth and their families and teaching them the importance of home ownership, because everybody's in a home, whether you're renting, whether your family owns it, whether you're, in school and going to be transitioning. Housing is something that you're going to need for the rest of your life. So you don't have to wait till you're a grown up with a seasoned job and a whole lot of money in the bank to start learning about the process and get connected to the resources.
Good. and you touched on this a little, but Carol, could you expand on at what point should prospective buyers be connected with the housing counselor?
Yeah, well, I agree totally with Sharice, and I feel like, her work is so similar to ours. We think the earlier the better because this is really, the main thing that we do. And so, we've helped people for years and some came already pre-approved. So it's kind of the gamut. And some are from underserved communities. Some are young professionals who just, don't know the process or just want to learn the process. But I feel like our main product is confidence because some people are still intimidated by banks. And as Sharice mentioned, everything's digital and some people have basic literacy challenges who are gainfully employed and they might have digital literacy barriers. So, there are a lot of, I think having helping people know exactly where they stand and what their plan is and, having, someone to help them stay on course and celebrate, little victories and, talk them kind of off the ledge when they mess up. But, I just feel like the sooner the better. As soon as you decide that it's a goal and you want to learn more, you should connect with someone who can educate you on the process. And, I promote the HUD Housing Counseling Network because that's what we're a part of. But it sounds like Therese does as much education as we do. So
It's so helpful. In school, people always say we should have learned finances and home ownership and these exact things you're talking about. So
yes,
I'm very grateful that you guys are covering that. Marshall, how do you think that counselors, lenders, and real estate professionals build stronger referral relationships earlier in the process? How could they go about building that earlier?
Well, just echoing what Carol stated, right? The earlier, the better. I shared the story of Brenda. Brenda's journey was like 6, 7, 8 years long, right? So she engaged very early on with counseling and supports and to work alongside or to get to her goal. But just recognizing that we all play a role. None of us, do every step along the way. And so it's critical to establish those early introductions. I think Sharice had a really nice checklist, a readiness. Those are good items to share amongst each other and program operators. But again, just stay in good communication, clearly outlay expectations of programs and services, and don't be afraid to talk.
I see a few questions that I know this group can answer really well, and then a few on policies. So I'm happy to speak on that as well. It is kind of a twofold or two different questions that could be answered, and I'll open it up to the whole panel. But have you had to do a lot of work while we're on the topic of education? Have you had to do a lot of work educating lenders to work with Section 8 voucher holders looking to become homeowners? So that we have the educating the lenders and then kind of twofold is how do we get our municipalities to participate in the choice vouchers for home ownership? So I'll open this up to any of our panelists to speak.
Sure, I can speak for us, the voucher program specifically. It is a challenge to educate lenders. The housing choice voucher rules and regulations add an extra layer to underwriting loans for these individuals, and it does take considerable effort and investment. We have staff dedicated to doing outreach to our lender partners in trying to provide choice and options in the lending market for our participants. Certainly, we want, as much as we can, someone to work locally to them without having to travel or increase barriers in that way. So, Mackenzie, I really want to answer the second question too. Could you repeat it?
Absolutely. How do we get our municipalities to participate in the choice vouchers for homeownership?
Yeah, so any local public housing authority has that choice to administer a homeownership program. There is no additional funding from the federal government to support that, but it is a housing option within the voucher program. So I think just advocacy and reaching out. I know the federal government is making efforts to increase the opportunities through the homeownership program. There's information on HUD's website, et cetera. But I think that's the best place to start.
Yeah, if I can add to what Marshall shared, one of the things I love about being a part of a national network is that you get to learn what other areas are doing. And I think in terms of getting municipalities to buy in, sometimes they just need to see an example of it and that it was successful. I think a lot of times we assume that our legislators know all of this stuff because they're in position. And so, as realtors and realtists, we do spend a lot of time going to our local legislators, our senators, and educating them about policy and reform and process and things that are happening boots on the ground with their constituents, as they're going through different processes and things of that nature. So, having forums like this and being able to share examples of how it works successfully is a good way to get people to open their mind to the opportunity, one, of a great program like Key to Own. The voucher programs in our area, for a long time, they weren't accessible. Not accessible because they were so filled. There was a wait list, right? So people are like, I can't even really tap into that. And sometimes when constituents are going through different programs that may be provided, it's a little less desirable sometimes for a seller. So then it can still become a challenge for a buyer who has access to this opportunity to get through to a seller. So there is education going all around. And perhaps I see the question in the chat just to tap into that, the development of communities and opportunities where these specific products are relative and can be useful could be a solution in and of itself that we can look to do in the future.
Great. I love the education is really key component in all of this. Did anyone else want to add to the work in educating lenders to work with Section 8 voucher holders looking to become homeowners? All right, I think we got that question covered. I know we have one in the chat too. The housing. So we have one in the chat, and we kind of have a similar one in the Q&A. The housing crisis is not just a financing, but also supply. Less houses means inflated prices for everyone, including those below and above poverty levels. What are your organizations doing to increase housing supply in your areas? And so that one is somewhat similar, at least in how I would answer. And then I would love to hear from others too. Southern California has a lot of political interest in seeing more affordable ownership opportunities. The high cost of housing is making the subsidy per unit enormous. Are there other considerations than simply increasing the subsidy amount that we should be considered that is working elsewhere? As the U.S. Chamber of Commerce, this is actually really why we're in the room. That as we started digging into this and thinking about what our state and local chambers needed, we knew that they needed data and they needed solutions in order to advance these policies to increase supply in their areas. And so a lot of what we've come down to is allowing for smaller lot sizes. So this can be in new subdivisions, allow townhomes, duplexes, quadplexes, 6 units, depending upon the land. I know Southern California has a little more land than other places in California, but there's still not a lot compared to a place like Texas. And so in those cases, or if you think about after the wildfires in California, it would be much more advantageous for the surrounding community to allow for townhomes to be built where a single family home was. Oftentimes that's the only way they can afford to rebuild. So smaller lot sizes on new subdivisions, tear down and rebuild, and then allowing by right and commercial and residential overlay are some of the policies that we're thinking about that could increase supply to address this. There's different estimates, but we kind of cite 4.7 million housing shortage, but 4 to 10 million, as the White House recently stated, this gap that you're talking about. So yeah, we have to be addressing this so that we can have these homes to sell that our panelists were talking about today. Did anyone on our panel want to answer those as well?
Yeah, I'll take a stab, sort of at both of them. In terms of what we're doing at the Federal Home Loan Bank, and I would argue at all of the Federal Home Loan Banks, not just the Chicago Federal Home Loan Bank, we take a multi-pronged approach to the supply challenge, right? There's sort of two sides of the same coin as the affordability and supply issues. You and supply has been a real focus for all of us. So we do in Chicago and at all the banks, I would argue, we do a number of things. We provide direct support for development through our affordable housing program. So we have direct subsidies that support projects that are under development in the communities that our members work in or that they support. So it can be for sale or rental housing, rehab, new development, depending on what the need is in that area, but we provide direct support for development activity in that way. We also subsidize our members' lending. So if our members are doing lending for construction lending or rehab, most of the Federal Home Loan Banks, including us, offer discounted rates to our members if they want to borrow from us to then in turn lend to those projects. So that's another way more on the credit side. And then lastly, this is unique to my district, but we support capacity building for emerging developers of affordable housing. We provide grant support to fund internships and fellowships to bring more people into that development space, because in many parts of our communities, our districts, there is a need for housing and there's nobody to build it. There's just no development activity in those places. And so even if you have the money, there's no one to do the work or to sort of jumpstart those projects. So that's something that we've invested pretty deeply in over the last 5 or so years.
So
I love that.
I'll just chime in. So McAneasy, like you mentioned, the zoning in Birmingham, the city council has approved a new zoning classification called urban neighborhood that does allow, it gets rid of a minimum lot size, and it does allow for multiplex, small multiplex, duplex, triplex, really up to 12 units, which is very concerning to me because we don't have a land shortage here. We have 20,000 vacant lots and 15,000 tax delinquent lots. So I'm going, why are we doing that? And the land is cheap. But to me, that's concerning because it almost, once you get above 4 units, it's like investor owned, so I'm like, okay, that's the wrong direction. But I do get why it's, smart growth along transit corridors and for transit oriented development and things like that. But, they're blanketing some whole single family neighborhoods with this. And I don't think the residents really understand, what the new zoning classification is doing. So very concerning there. But we have an opportunity. So we've been working with the land bank and some private owners to assemble lots in some of the areas that seem to have a catalyst that's going to generate more demand for housing, because you really can't go and invest in the most blighted neighborhood you can find unless you can buy every lot and just do everything. So we've been strategically acquiring properties, working with our community foundation on some low-cost capital, and also working with a very successful large tract suburban developer who is nearing retirement. He sold his company to his employees and generated this big donor advised fund, and he wants to do something charitable. So he's committing to help us build 20 houses a year at a very low cost, really at cost. And his suppliers want to help by discounting materials even further. So we're planning the pilot for next year. It's hard to find comps, so we're working closely with appraisers to, get our financial modeling right. But we're still relying. We're doing a mixed income model because the areas will support. Not all of our areas will support market rate housing, but there is one area close to downtown that should support market rate housing, and so we're going to mix it up to get a little more upside in these deals and be able to subsidize workforce units with the proceeds from the market rate, and then the city or the housing authority can still step in to provide the deep subsidies for the units that will be 80% and below. So, trying to develop new construction in this environment is just daunting. And many of the subsidy programs will require you to sell them to 80% and below, and the numbers just don't work. But again, for every 10, if we're doing 3 workforce and 2 80% and below, we can make that model work with 5 market rate. So about half of them would be above 120% of AMI, and half would be below. So we're excited that we found a way to do something in this environment.
Mm-hmm. Sharice, you came off mute, or you came on over there.
Yeah, I'm excited to hear both of Carol and Katie talk, because through NARAB, they have going into the 3rd cohort of a developers academy. Okay. And I was in the 2nd cohort of the developers academy. So talking about emerging, even scattered site developers is one aspect of it, because you're creating more talent in the pipeline to help cultivate and create and fill the housing gap. As far as the land and the zoning that Carol was talking about, you have homeowners who are sitting on, sometimes 5 acres with a small little house, just because that was what the zoning ordinance was. And even though we have, national and state legislation that's being put forth, the county jurisdictions still have some rule, right, over the zoning. And it comes back to education of residents feeling like, oh, I don't necessarily want this type of development in my backyard. But I think a lot of it is storytelling, being able to help people understand and see the big picture of how it will help to stabilize their communities and support the future of their economic development, as well as the workforce. Putting our youth in position to get gainful employment sooner than 4 years after they graduate from college is going to be critical to the success of this country and just the world in general. And so I think we'll start to see or need to implement. I know, again, the realtors are doing that with a program to introduce the real estate profession, not just as a realtor, but appraiser, inspector, all of those things to high school age and early college students, because you can get a license at 18, right? So if we open up and create more opportunities for workforce and income generation, then we'll have more people who can participate in these fields, helping to build and create, and can be able to afford the housing that's being created. So it's being creative and having all these solutions and being able to just map them out and activate them.
That's so great. And just the education all around, that is a key takeaway for me on every aspect. One education specific question is the lot included? I'm opening this to anyone. Is the lot included in home ownership programs? Does the homeowner own the land? I think this was tied with one of our speakers.
I would just say in our situation, yes, because we don't have a functioning community land trust at this time. And that model, typically only the improvements are conveyed to the buyer and the land stays in the land trust. But again, we have a lot of land here. So, we did go to the legislature to get the authority to create a community land trust. So that is new authority that we have here, that it remains to be seen how it will be used for homeownership, to accelerate homeownership.
Well, we have 2 more minutes. I know we had some great questions in the chat. We also had so many questions queued up that we didn't even have time for today. So is there any last closing thoughts that any of our panelists would like to make of something burning that they'd love to say before we end?
I feel like I talk a lot, but I'm just I'm just going to say this. As we come up and cultivate solutions, I think it's important not to blanket things, because people are coming into this journey from different walks of life and different experiences. if we recognize that it wasn't until 1968 that the Fair Housing Act was passed, I mean, that was not a long time ago for Black home ownership to be allowable necessarily. So when we think about housing counseling, over 250 years, right, of a country being in existence, we have to understand there's a lot to unpack and a lot of miseducation that has to be corrected. And so, the importance of housing counseling agencies, the importance of real estate professionals that understand it's not just about selling a house, but empowering a consumer to be informed about the decisions that they're making and the lifelong impact that it can have on their lives, on their communities, and the lives of their families, I think is a key takeaway from today. Don't blanket, meet people where they are and understand their stories so you can help make their future better.
Well, that is a perfect close. I want to thank all of our panelists for the discussion. And to close out our program, I am excited to turn it back over to David Dworkin, President and CEO of the National Housing Conference, for a few final remarks. David, back over to you.
Thank you. Just trying to get my video on here. Everybody, that was awesome. Thank you, Mackenzie, Sharice, Katie, Carol, for that great discussion. Thank you to Kjo and all of our friends at NeighborWorks America for working on this and sponsoring it. And I think it just was so valuable. And as special thanks to our incredible team, including Brittany Webb, Cara Bigay, Erica Ramirez, and Whitney Sarkoti. We couldn't do anything we do without all of you. And I hope you all have a great week.